All right, we're back on for our afternoon session. So I think there was one reasonable trade, and that was right here. It was good because we had a second entry long, first entry here, second entry that was failing. So the bulls that were buying here, they're going to be getting out below that, which is what happened. And you can see we had this big bear bar, which is what it sold off. So a lot of the bulls that bought here, they ended up moving their stop below this bear bar, or they held it below here. But either way, they got stopped out. And they were getting out of their longs through here, which has created this big bear bar. My concern with it, the reason I didn't sell, is because we're so close to the 6,000. I don't like to be selling into support like that. So often we'll bounce at a at that kind of support. Looking back here, we did break through it. Here we did break through it. Ultimately, these were failed moves lower that bounced from this. And then here we bounce right at it. And here it bounces well. And then all of this test, this, and this, these were all bounces off of once it was acting as resistance. So often it'll bounce right at it. And so I didn't like to be selling into support. I think if that I think the candlesticks look good. I think the context was good, except for that support being right below. So I don't like selling into support. Where did the market come down to? Right to yesterday's close, Friday's close right here. It came within a couple ticks of the 415 close, and then bounced. So after this breakout, we have this gap that's been created, this low and this high. So that's good for the bears. That means anybody that was buying below this bar, the market has not come back to it yet for them to get out, break even. So people that were buying below that, they're still trapped into that bad trade. And that's what these gaps really mean. That's why they're important. Bears were strong enough to prevent any overlap, which is different from what we were getting here and getting here, where there was plenty of overlap. I think it's reasonable that bears could sell below here with a stop up here. So when you're selling, your proper stop placement should be at the top of the most recent strong leg, which is up here. So the market is going down, and if you short here, it's reasonable to stay in your short. You're not really considered wrong until the market actually goes back above this. There's a clear example I wanted to show. So bulls buying in here, 4 strong legs up. We're probably going to get more up, and it's reasonable to be holding your longs. Some bulls got stopped out during this move down, but if you're buying here, really the best stop placement is down here, which is below the most recent strong leg. Now look, if you put your stop here, you never got stopped out. So you're able to hold through all this, and then later in the day, market got the second leg up. So when thinking about this move down here, if someone is selling down here, really their stop needs to be up here. I think if there's a credible bottom, like we get a wedge bottom or a double bottom and a strong bull bar, then you can get out above that. But in general, you're able to hold your short as long as your stop is up here. As long as that stop does not get hit, then the market is still bearish. Uncle Luke, everything's good here. Thank you for joining the stream. We had a morning stream, and then we took a break for lunch, and now we're back, and we got this afternoon stream going on. So earlier in the day, I was talking about we were probably going to have an upper trading range, and then if we break out, we're probably going to have a lower trading range. And this is how I drew in the lower trading range earlier. So we had this trading range up here at the start, and now that we're breaking out into this lower area, I don't think we're going to just continue to trend down strongly all day. We're probably going to have bounces in this area. So oftentimes you'll have an upper trading range, and then you'll have a lower trading range. And I suspect that we're kind of falling into a lower trading range here. You know, we have lots of support below. I mean, we have the close of Friday. We have the 200 moving average. We have these lows around here. And then also just this measured move is that in itself is a target. It's going to act as support down here. Uncle Luke, what are you trading today? Either futures or stocks or options? Bears closed below this low, so that's good for the bears. They're still getting decent selling. As we move lower, I'm concerned that the bears are starting to get exhausted. Like it's starting to get climactic. We've had multiple sell-offs today. Here, several of these smaller sell-offs, and then now we're getting here, and we're starting to get some of the. This is one of the larger bars of the day, and it's coming later in the trend. When you start to get larger bars later in the trend, that means the trend is starting to get exhausted. And think about it from the perspective of the bears. Let's say they had sold here, and they had held for a swing all the way down here. Now they're getting this big bar. Now it just granted them an extra 10 points suddenly. So they're thinking, well, I've already made all this money, and now I got an extra 10 points. They're probably going to be taking off some. Maybe they'll hold some of their contracts, but probably a lot of them will be selling partial. They'll be getting out of some of their contracts. We're also getting far from the moving average. So as we move lower, we'll probably get more settled. Kind of get more settled into this trading range area down here, and find buyers at the 200 moving average and at this measured move. Those little noises are Penelope, the dog, is making little. This is the dog. This is Penelope. Looks like the Ewok from Star Wars. That's what I was saying. Look, I think that's pretty spot on. I think that's I think that's pretty much it. Bitcoin's kind of seeing a little bounce away from the 100,000. I'm pretty sure it's going to get to it, but it just keeps on finding sellers up here. I think once it gets above it, it has a decent chance of running for a while. Maybe like 100, but it's got to get through that 100,000 resistance. So if I was a bear, I'd probably go ahead and just get out above that bull bar. The wedges so far have not worked out very well. So we had a wedge here. Buyers above that ended up getting stopped out somewhere. Wedge here. Once again, buyers lost. We have a wedge here. So if you look at this sell off, and then second push and a third push. So to me, that increases the reason that I want to get out above that bull bar. I talk a lot about the three parts of the day: the open, the middle of the day, and then the end of the day. I would call this the open up until about 11:30 here, because we're really in this trading range market on the open. The middle of the day actually was a breakout. The sell off. This has been the middle of the day. Now as we get closer to that like 1 o'clock, 1:30, 2 o'clock time, then we'll see, does the market continue down or does it reverse up? So I like to try to find trades around that kind of pivotal moment of when the market's either going to continue doing something or or it's going to stop. And I was talking about, I think this was a good looking short, and it worked out pretty well. My reason for not taking it is because it was coming right into the support of 6,000. If you're selling here, you only have a couple points to get out before it hits that. In a way, it's kind of the same reason avoiding selling here, because you're coming right down into this low here, the close of Friday. So I think there's been some reasonable shorts, but you're just going right into, each of them are right into the support. So it's not really the optimal. It's not the best possible case. And if I'm going to be putting my money on the line, then that's what I want. I want it to be the best possible case in my favor. Let's pull this up. Something I'll do on the tick chart. I'll draw in horizontal lines. Well, really, I mean, you can do this on any chart, but at any random price where the market starts to find support and resistance at a certain level, kind of like up here. Here's an example. You can see for some reason, for whatever reason, it was support here. And if you draw it across, support broke through and then acted as resistance. Eventually, bulls gave up and sold off. And usually, several times in a day, you get these micro support and resistance levels on this lower time frame. So maybe this acts as a resistance here, and it sells off a little bit, or it breaks through. But if it breaks through, it'll probably pull back and act as support before heading on. At the very start of the day, I was talking about how we can have. At the very start of the day, I was talking about how we can have. Probably going to have strong moves today, but those strong moves would not have good follow through. It's like we probably wouldn't go one direction until the close. And I was thinking that because the daily chart has had a lot of two-sided movement in the last couple of weeks. After the strong rally from the election, we've pretty much just been sideways. Most days, bull bar, but then got a huge tail down, and then after that huge tail down, the market just reversed up. So same thing here. So a lot of days are not getting very good follow through, So I was thinking if today is a strong move down or up, it probably would not do that until the close of the day. So I would be expecting some sort of reversal coming here. So if we are in a lower trading range down here, that would mean that buyers below should be able to make money. And so far they have been. I mean, doji bar, buyers below we're able to scalp out here. Buyers below this doji bar, able to scalp out here. So we're getting a little bit more into the two-sided market again. It's a bit early to say this, but if the market does start to head up, the open of the day is going to be the target. Oftentimes what will happen is there'll be a strong leg in the last hour that gets up to it. So maybe we go sideways here until 3 o'clock, and then after 3 we get a strong rally up. And we do have an example of that here on this day. A strong sell-off on the open trading range for several hours, and then once you get into that 3 o'clock time frame, the sellers basically got out of the way, and then the buyers took over, and it bought up to the open. So when you're down here, you're saying there's no chance we'd get back up to the open. And then after going sideways, the bears stop selling, bulls take over, and that open becomes a target in that last hour. So that'd be something to keep in mind, a trade to possibly look out for. If you think there's a chance that it might get up there, then you should be swing trading in that direction. Maybe like if you're buying above any of these bull bars, well, then you should be going for several times your risk and trying to get up to that open. So it's possible that it would just go. We'd get several strong bars and just go up to it now. I don't think that would happen. I think we're more of a trading range. This is the first bull bar above the moving average that we've had in a bit. About 20 bars, the first time we've had a close above the moving average. So my guess would be that sellers of this close will be able to make money. Sell here, either they make a scalp immediately, or they could scale in higher, and it'll come back down to this price. Other people might bet that this is a V bottom. strong leg down, strong leg up. They'll bet this pullback is small, and they'll be buying here with the tight stop, and going for several times their risk. So you know, maybe they buy somewhere here, put their stop 2 or 3 points below, and then go for like go for like 10 points. I think you'd have to be okay with losing. You know, you'd have to be okay with losing a lot. But I do think that'd probably be reasonable. There's pros and cons to both scalping and swing trading. Swing trading is better. It's something that beginners and advanced traders can do. Versus scalping is just advanced traders can do. But the cons with swing trading is that you actually do have to be able to make the larger profit. So you're going to lose the majority of the time because your stop is tighter relative to your profit. So you're going to lose the majority of the time. But when you win, you actually have to let your win become a big win. Right? You can't, let's say we buy here and it goes up a couple points. We can't get excited and say, "Oh, we finally have a couple points. Let's get out of the trade." No, I mean, if you're swing trading, you have to go for the swing because you have to have that big win to offset all of your losses. So that's something, you know, you have to get over when you're swing trading. So if someone had bought this close and put their stop 2 points away, they would not have been stopped out here. Bulls might be able to get a swing up here. We can see they're getting these gaps. The high of this bar, low of this bar do not overlap. Same here, the high of this bar and the low of this bar do not overlap. So we have gap there, gap there. When you're starting to see gaps, that could be early signs of a trend. So the sooner we can identify a trend, the better. So basically now I'd be looking for, now that we're above the moving average and we're above 6,000, I would look for pullbacks to this level to be tested and then try to find a swing trade up from that. because this is really just our first breakout of this level, right? First breakout of the moving average, first breakout of 6,000. So to go for a swing trade, I'd really like to see it, the bears try to go lower and then be unable to, and that would show me signs that the bulls are stronger and that we will have a trend up. But these gaps here are definitely something to keep in mind, as they might be pointing to that these might be early signs that we will get a move up. Uncle Luke, if you're still in the stream, I was curious to know about what you trade. So because of these gaps, because of the strength of this move up, we were able to close above the moving average and get a follow through close. So because of that, I'm bullish now. So I'm not looking for shorts at this time. Now, I'm not just going to buy the market and hope that it goes up. I want to wait for the right setup to come. Some people though will buy at the close, and what they'll do is they'll buy here. Their stop goes down here, and then basically until they get a reason to get out of the trade, like something like this, like a second entry short, then they'll stay in and they'll leave their stop down here, and then they'll if the market's going up, then they'll ride that up, and if it shows signs that it's going to go down, then they'll get out, and they give themselves room by putting their stop down here. But if you do that, your stop has to be 25 points away, which means you need to trade smaller. So a good close for the bulls. Closed above the prior bar. gaps are staying open, 6 bars in a row, so good for the bulls. Could this be a bull leg in what is a trading range or a bear trend? So yes, and that's really why I'm waiting to buy. I'm really waiting for a pullback and look for a setup to buy. Because there's a chance, this is the strongest move so far in what has been a bear trend. So a strong move in a bear trend gets sold. So there's a chance that would get sold and that this would lead into a trading range down here. I don't think we're going to continue as a trend for the rest of the day. I think it'd be more like trading range. I'll be right back. So this was an interesting We'll see if any of these news articles let us actually read. So here it is. So MicroStrategy bought 55,000 more Bitcoins in the prior week, and they paid an average price of 97,862 for it. So that's quite a lot of confidence in Bitcoin that they're buying that much. They're buying over 5 billion at the all-time high. So currently their average cost is 56,000. It's really interesting that they were buying more at 97,000. They were buying into that 100,000 level. It's interesting that they were wanting to buy so high. Interesting. That's a lot. That's a lot of Bitcoin to buy at the all-time high. So that means they just bought 5 billion of Bitcoin at this price. So 6 bars up, I'm looking for a pullback to buy. What I want to see is the bears trying to go lower and fail. So 6 bars up. This is a first entry short here. Right now we have a first entry short. What I'd like to see is there to be a second entry short and then a bull bar. So the bears are trying twice to go down and they're not able to. And then the bulls have a chance to take over. So that would give me a reason to buy. So this wedge has worked out pretty well. First push, second push, third push, and micro double bottom, bullish signal bar. So at a minimum, I was saying the bear should get out there. This has been a nice straight leg up for the bulls that bought here. Bears have their first entry short. I'd like to see them try to go lower again. So Bears trying to make the bull stall here so they can get a second entry short. And like I said, that second entry short is what we're looking for. So I want this to form and then try to get a buy setup after that. So the second entry short just formed. Bears prefer to sell below second entries. So now what I'd be looking for is something like this where market goes down a bit. Kind of something like this. Second entry short fails, and the bulls were able to trap the bears in, and they're able to push it up. And as they're moving up, the bears have to get out of their shorts, which is what causes all the buying. So I can also watch the 2000 tick chart to see if there's a setup on this lower time frame, kind of an earlier, possibly an earlier setup. So if the bar closed just like this, I think it'd be okay for a swing buy up. Don't know how interested I would be in buying above this because now our risk is starting to get rather big. Close above this previous high. That's good for the bulls. I think this bar got rather large, so it's harder to structure a trade. I think we still need to recognize the risk of this being a second leg trap. So, first leg, pullback, second leg. And, if we are in this trading range or if we are still in a bear move, then this would be this second leg just acts as a trap that the bulls get trapped into buying. That's my concern with this being this bar getting so large now. the market's coming right up into this support resistance level. So it's a concern for me to be buying right into that. Kind of like I was wanting here was a secondary short to try to find a buy setup. Might want to try to find the buy setup above this now. Because if we're buying now, we're buying right into this level where we've found so much selling prior in the day. So I'd rather see a breakout above this and then look for a buy setup above that. I'm gonna eat a little something, so I'm gonna have my camera off, but I'll be here and I'll mention anything if it comes up. So we've got a couple minutes left on this bar. If it's a strong close, it's a potential for a breakout up. An issue is now that we're running into the chance that we're having a wedge pattern here now. So these 6 bars, this is the first push. Pull back, second push, and then pull back. And this bull bar is the third push. It's potentially a wedge here, which could lead to a reversal down. Really, that relies on the bar after this one and the bar after that. Possibly we have a spike in channel. So these 6 bars are the spike, and then we're getting a channel up now. So a pretty bad bull bar. You know, how excited will the bulls be to buy above that? Probably not very. Probably more sellers above that. I'd still be interested in seeing it go up to the open of the day, but we just have to give it time to let some of these bars play out. Earlier I was talking about when you see overlap, you should just be stepping to the side, like it's talking about in here. It was either here or right here. I was talking about when you start to see these multiple bars overlapping each other, then you should just wait. But we're starting to see that here. And you can call it these 3 bars, tail on the bottom, tail on the top, overlap. Or it's these full like 8 bars here, 8 or 9 bars. So it's best to just wait instead of trying to get too clever. You'll get mixed up trying to trade during this. So we're gonna end this at 2 o'clock. If you guys have any questions before, then just let me know. I would be leaning towards the last couple hours here being bullish. I think we've tested the close of yesterday. We've gotten close to the 200 moving average. I think the market will be more interested in seeing what's up here at the open because it's been a while since we've been there. We have the open above. We have the the all-time high above. I wouldn't expect that we get there today, but I think we could have an end of the day rally that gets up to the open. So this is a reminder, this week is Thanksgiving, the 28th. I don't expect there to be any issues with trading on like Wednesday. Probably Friday will have lower volume because so many people are on, they're just on vacation on that Friday. So I wouldn't expect too much to be happening on Friday, although it still should be fine to trade. And, I think Wednesday would be fine to trade as well. But my idea coming into this week is that strong moves will not last. Because any positions that are opened Monday, Tuesday, Wednesday, well, most people will probably want to get out of them before going into Thanksgiving. I don't think they're going to be wanting to hold those positions going over Thanksgiving. So if there's a lot of buying, like Tuesday, Wednesday, well, probably by the end of Tuesday, they'll want to get out of their longs, which means that bull trend would have to have a sell-off. Kind of like I was talking with here today. I mean, this has been decently strong move down, but instead of us getting more follow through, we're getting buying here. So I expect strong moves to have bad follow through, which ultimately leads to a trading range, so I expect what we've had to continue. After the election, four days up, but then we had 5 days down. We had these 2 strong days down, but look, then we got 3 bull bars, followed by 2 more bull bars, then a big gap up. Today we had this gap up, but sold off. So we've not been getting good follow through. Penelope's barking at something. So this is another one of those pivotal moments. If this bull bar closes near its high, I think it's a swing buy. So I think it'd be reasonable to buy above that bar. Here's the thing. If it sells off and you get stopped out, that might mean that the bulls are on the wrong side. The bulls are trapped into bad trades. And then once it goes below the moving average, then from there might be a sell-off. So let's say like you buy here, it goes up a little bit, but then basically stops you out. Now you're below the moving average, you're below 6,000. Something like that could be possible. So if the long here doesn't work out, then I'd be trying to watch to see if bears are able to trap the bulls and sell the market off.
Order submitted. Order canceled.
A little bit too much tail on top. I was thinking about it. It'd probably still be okay. A little bit too much tail on top. Not. I was kind of looking for the bulls to be more aggressive and buying into that. You know, like bears that had been selling through here. I'd want to see the bulls more aggressively trying to be like stopping them out and getting them trapped. All right, guys, it's 2 o'clock. I'm gonna hop off the stream. If you guys get any good trades today, go ahead and post it in the Discord. I'd love to see what you guys got.